My name is Gaurav Jain, and kindly stay with me till the end of this episode, and I'm sure we'll all enjoy and learn something. Thank you. July marks the taxation filing season, so we thought we should bring to you a video on taxation. This video is the first part of a two-part series on how REITs and InvITs are taxed. Before we begin, a disclaimer: this is an educational video, and please consult your tax advisor before taking any decisions on your investment. When we look at REITs and InvIT taxation, we would essentially cover the point of view of a resident Indian individual investor. And the 3 points we'll mention here: that the withholding tax, TDS, we are considering as 10%. The main tax rate is being covered, ignoring surcharge and other cess. And third, non-specified categories, what we consider, and the units held will be as a capital asset. So going forward, REITs and InvIT taxation is very different from taxation of corporates because of these three reasons. One, REITs and InvITs are categorized as business trusts. Number two, they have a pass-through status and the vehicles are taxed in an efficient manner. The idea is to avoid double taxation for the shareholders or the unit holders of a REIT or InvIT. And the third is that the suitable provisions in income tax are enacted for these two purposes, that as a business trust and as a pass-through vehicle, and for tax efficiency. For the purpose of taxation, we have to consider incomes. Now there are two types of incomes which arise in a REIT or InvIT, as we have covered in our video dated 12th May 2022. There are two components of total returns from REITs. One is the recurring return, and the second part is a capital gain. So if you are unclear about this, you can probably go back to that video and see. And the tax on Indian residents is therefore on two accounts. One is on periodic returns, and the second one is when the person sells the unit. The investment is liquidated. At that point of time, there is an incidence of tax. Therefore, on periodic returns, the taxation happens to be same as the nature of income, and on the sale, capital gains would be short term or long term depending on the character. Both these points we are going to explain in our coming slides. The first, we would cover the sale or liquidation of investment and the profit arising therefrom. The classification of capital gains is in all assets dependent on the time period that the investment is held. Depending on that, in every asset, there is a long-term capital gain or a short-term capital gain. In the case of REITs and InvITs, the time period as of now that has been specified is 36 months. That's the key figure. So if the investment is held for more than 36 months, then the gain arising thereof is considered as a long-term gain, and if it is held for less than 36 months, the gain is classified as a short-term gain. And what is the amount of tax thereon? So it is specified that for long-term capital gains, which means a period of holding of more than 36 months, and if you have capital gains more than 1 lakh INR, then 10% is the amount of capital gains on long-term assets that is charged. On short-term capital gains, an amount of 15% of the capital gains, short-term capital gains, is charged. These are for STT paid units. Therefore, the rates are similar to equity, normal equity investing, and the time period is different, which is 36 months compared to 12 months in normal equity investing. Next, we come to the taxation of periodic returns. As we all know, REITs give out periodic returns, InvITs give out periodic returns, and currently REITs and InvITs in India are giving out quarterly payments to the unit holders. So the taxation assumes the same nature as the nature of income. This we will highlight further on. For the people who've seen the video released on 26th May 2022 covered the fact that distributions in a REITs happens to be into 5 main accounts, 4 main heads. One is dividends, the second is interest, the third is return of capital or amortization of loans of SPVs, and the fourth is rent. So again, there is a subdivision that dividends can be taxable or non-taxable depending on the whether the concessional tax regime has been opted for or not in the SPVs. So these we will cover further on. The reason that the bifurcation of distribution is done in these various ways is a lot to do with functionality, but here, since we are on the topic of taxation, the tax efficiency is maximized when a structure like REITs performs and gives out payouts, as we have already highlighted in our same video which we just mentioned on 26th May 2022. We have a Mindspace REIT which is giving more than 90% of its payouts as tax free, and similarly Embassy is giving more than 80% of its payouts as tax free. This in fact increases the pre-tax returns of the shareholders, and that's a very, very important part of REIT being a very tax efficient vehicle. In our next episode, we will cover these various ways of payouts and how they are taxed. So please do subscribe to our video and stay in touch. Thank you.